Coming up on Market to Market. Holding back the water and picking up what's left. Getting an economics lesson with a trip to the grocery store. Those stories and market analysis with Ted Seifried next.
For the big three as a whole.
Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, October 19 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. A recent poll conducted by National Public Radio revealed that rural Americans do indeed value small-town life. A majority felt their children would have better lives than their own. One of the problems that seems to be universal is the ratio of how much you get paid versus how much things cost. Retail sales figures were up 0.1% last month. When the cost of energy and new cars are taken out, core retail sales moved 0.5% higher. New home construction fell 5.3%, continuing a slide that is expected to accelerate as mortgage rates move higher. Existing home sales fell 3.4%. September data indicates the market was already soft before Hurricane Florence struck the East Coast. The fallout from bad weather continues to plague the country as the South digs out from yet another hurricane, while portions of the Midwest impatiently wait for drier conditions. John Torpy reports.
President Trump visited FEMA sites in the Sunshine State this week, surveying the damage caused by Hurricane Michael. Trump distributed water to victims as they returned to their homes 1 week after the Category 4 storm pummeled the Florida Panhandle. Hurricane Michael took more than 35 lives across the region and destroyed what was expected to be a bumper crop for southern cotton growers. The Georgia Department of Agriculture is predicting the cotton crop will be a total loss. This is similar to the pounding Texas cotton growers took from Hurricane Harvey in 2017. Peach State pecan producers suffered setbacks for the third year in a row. Starting with Matthew in 2016, a hat trick of hurricanes has reduced pecan crops by at least 1/3 annually. Vice President Mike Pence toured areas where Michael caused significant damage to Georgia commodities.
This represents generational loss to see these 4-year-old pecan trees down right about the time that they were getting close to producing, taking 10 years to get all the way back.
U.S. Agriculture Secretary Sonny Perdue pledged the full support of the USDA for those impacted by Hurricane Michael. South Carolina producers joined the group of those affected by the storm, losing 70% of their cotton crop. Soybeans, peanuts, and fruit crops also suffered damage, bringing the total to a statewide loss of $125 million. The overall agricultural price tag for Michael's wrath is predicted to be over $1.3 billion. In the Lone Star State, torrential rains washed out bridges and forced disaster declarations in 18 counties as the Llano River rolled over its banks. Heavy rainfall has soaked the area, making rescue efforts difficult. The Lower Colorado River Authority is opening floodgates to alleviate flooding around the town of Llano. Forecasters are predicting an additional 1 to 2 inches of rain in the area over the weekend. In the Midwest, farmers are finally getting back into the field. A long stretch of wet weather has kept the harvest of corn and soybeans behind the 5-year average. From Market to Market, I'm John Torpy.
According to the USDA, one definition of a food desert is an area with limited access to sources of healthy food as measured by distance to a store. For those living and working in rural America, getting the ingredients to put a meal together may require a journey of an hour or more in one direction. However, one Midwestern community has found a way to cut the travel time from grocery store to dinner table. Peter Tubbs has more in our cover story.
The weekly grocery delivery from North Platte has arrived at the Circle C Market in Cody, Nebraska. 6 students from Cody Kilgore High School help unload the shipment and stock the shelves and coolers. These students are the only employees paid by the market, which is part of why a village of 150 residents can support a grocery store.
We try to get all of our groceries in Cody as much as we can because we know that the store is important to the town. And we know that we appreciate it being here, and if the store wasn't here, we might not have the opportunity to live here.
The small supermarket is a nonprofit. More significantly, it is a joint project between the Village of Cody and the Cody Kilgore School District. The business teacher at the high school oversees the store in addition to her teaching duties, while the students perform the majority of labor and management jobs.
I stock shelves, I deface shelves, I check people out, I make sure the store is presentable, dusting, defacing, really just helping out.
Students earn a paycheck for each hour worked, as well as academic credit hours. But responsibility for managing is handed to anyone who is ready for the burden. Bentley Jenkins is the current purchasing manager and also programmed the point-of-sale system that is used to check out groceries.
It's kind of hard. In our point-of-sale system, we don't have the inventory totally up to date yet, so we can't just print off and then go from ordering there. For ordering, we have to walk around the store, see what we need, and kind of guess. So it's a little tricky.
While the selection at the Circle C can't compare to a full-service grocery store, the time savings justify choosing from the limited selection.
Well, if the store weren't here, I would have to drive to Valentine once a week and get groceries. It's about 38 miles to drive there and then load up on everything, and just the storage and planning for all that would be pretty hard with little ones.
The majority of groceries arrive on Thursdays in time for households to stock up for the weekend. The 63 students of the Cody Kilgore School District are on a Monday to Thursday calendar, which saves on transportation costs for the district and frees students for ranch work on Fridays. But the lessons learned on the job extend past the basics of business.
I'm really learning people skills because I don't really talk to people very often unless I'm working, because then you have to be nice and all that, which I'm not very good at.
The 480 residents of the school district are spread across 550 square miles, making it one of the least densely populated districts in the state. The Circle C is the result of a volunteer effort begun in 2008 to return a retail food outlet to Cody, which had been without a local grocery store since 1995. The market has purchased much of its infrastructure used. One cooler and the checkout stand came from a store in Valentine that was closing. Other coolers and shelving came from another store in Valentine that was remodeling. A USDA grant funded the initial construction of the store, which was built using straw bale techniques that date back to the 19th century Nebraska prairie. The straw walls are thick, but also energy efficient. The store uses $600 to $800 per month in electricity. Almost all goes to running the large coolers. Under its present structure, the store is sustainable month to month and has become a community hub where neighbors meet for a few minutes out of their day.
The best job is probably checking people out, helping them. It's community members that I've grown up with, and it's fun to help them out and see them around town.
You got to have a bank, you need a grocery store, you need a school to start with. And we've got all of those now. And we just got some young people becoming more involved. And a small town like this, you're either surviving or you're dying, because you need to be a town of destination, not one of stopover.
Summer reduces the sales volume by 50% as residents make fewer trips into Cody. Many households have second homes in town for the school year, with the primary home on a ranch elsewhere in Cherry County. Commutes of 50 miles or more are common in northern Nebraska, and many households have planned meals a week or a month at a time due to the effort needed to buy groceries. The Circle C provides the luxury of only having to plan out a few days. Groceries are priced 35% over their wholesale cost, which is still competitive with stores in Valentine. But while the store pays students $30,000 annually for hours worked, those margins won't cover the salary of an owner or manager. Circle C only survives as a non-profit educational project. Cody lacks the population to support a for-profit store. Nonprofit status allows spending in other areas, like college scholarships for student employees tied to the number of hours worked in their high school career. Scholarships can reach $600 per semester, but sometimes students have to warm up to the job.
At first, when I was hired, I did not want to do this job. My parents forced me to have it. They're like, "Oh, it'll be a good experience for you," because my older brother, he was the student manager his last year of high school. So I was like, I'm going to hate it. I don't want to do it. I ended up loving it. So it's kind of funny, I think.
From Market to Market, I'm Peter Tubbs.
Next, the Market to Market report.
Weather, cancellation of exports to destinations unknown, and a South American trucker strike pushed the commodity markets lower. For the week, December wheat lost 3 cents and the nearby corn contract fell 7 cents. The November soybean contract sank 11 cents as news of an Argentine trucker strike did little to hold back the effects of good harvest weather and canceled Chinese orders. The December soybean meal contract followed along, dropping $3.80 per ton. December cotton finished 45 cents per hundredweight lower. Over in the dairy parlor, November Class 3 milk futures fell 24 cents. The livestock market was mixed as the December cattle contract added 60 cents. November feeders shed 53 cents, and the December lead hog contract declined $3.40. In the currency markets, the U.S. dollar index improved 55 ticks. December crude oil dropped $2.50 per barrel to fall below $70 for the first time in more than a month. COMEX gold gained $6.70 per ounce, and the Goldman Sachs Commodity Index fell more than 5 points to finish at 474.80. Joining us now to offer insight on these and other trends is one of our regular market analysts, Ted Seifried. Ted, welcome back.
Hi, Delaney. It's a pleasure to be here.
Pleasure to have you, Ted. Let's start off here talking about the wheat markets. I want to talk about wheat exports specifically. We had relatively strong exports this week, yet we still continue to be trading in a sideways pattern here. What's it going to take to get us to break out of this pattern?
Yeah, it's a good question. I mean, we're really waiting for that next piece of information to give us direction one way or the other. Now, if you look at the chart, we have broken the downtrend line. So that is the good news, but it hasn't really given way to an uptrend. It's just given way to a sideways trend. Potential things that could sway that, you know, there's a lot more talk again about Russia limiting exports. We saw the USDA lower their production number by 1 million metric tons last month on the October WASDE report. We saw them lower Australia 1.5 million metric tons. So hopefully that means that further on down the road we can see more exports out of that. But until we do, I think we're just kind of stuck in this rut, and soybeans and corn aren't really helping things either.
Ted, my follow-up for that is, okay, the USDA has said they expect exports to pick up here in the second quarter because of issues in Russia and Europe and some of those other places.
Right.
Do you think that's going to come to fruition?
Well, yeah, I mean, when you see them starting to lower the Russian crop after moving it higher the previous 2 months, that kind of says that they are settling now on a lower number, and that number likely, I think, will come down again. So it certainly does open the door for more U.S. exports. The question really is how much? Is it going to matter enough to clear up our balance sheet? Are we going to feed as much wheat as what we're currently expecting because of the low prices of corn? Yeah, ultimately, we're looking for wheat ending stocks to be just about 60 million bushel below where the USDA currently is. I don't know if that's enough to really see an extended rally in wheat or not. A lot of that's going to depend on what happens with the price of corn.
Explain that to me a little bit more, Ted. The price of corn, if the corn prices go up, will wheat go up along with it and vice versa? Yes,
Delaney. So in a lot of ways, corn and wheat are substitutes when it comes to animal feed. Now, we're not going to feed as much wheat as corn really ever, mainly because the price of wheat is higher, and it only figures into a percentage or a portion of what we would feed. But we feed more wheat if corn prices go higher. And so that's why wheat prices will follow along with that a lot of times. So Yeah, again, you know, if corn prices stay low, that means more wheat feed potentially, but if corn starts coming up, wheat might have reason to kind of follow along with that.
Let's talk about corn, Ted. We had weekly export sales this week, low weekly export sales. Why was that?
That's a really good question. It was a very disappointing number. We obviously weren't expecting it. The market wasn't expecting it. We weren't expecting cancellations to unknown destinations. So that was a bit of a surprise, and it was not a very pleasant surprise. So part of the reason why we were down as much as we were towards the end of the week. To me, that seems like it might just be a one-off.
Okay.
You look at where we're priced in corn. We are very competitive on the world market. Yes, the dollar is strong and was stronger here this week. But even still, we are the shop for wheat or for corn right now. I think our exports, which are above the pace that we need to hit the USDA's numbers, they will continue to be very strong throughout the marketing year. And I still think we're going to beat the USDA's corn export number.
So we closed below the 100-day moving average. We had 4 down days here in a row. Opening up trade on Monday, do you expect to continue to see us in that downward trend, or do you think we'll move off of this export news?
Well, overall, the upward trend that we have is still intact. I do think we are going to keep that upward trend intact. That doesn't mean that we can't be a little bit lower to start early next week. I think what we're seeing is a bit of harvest pressure as guys are moving corn more so off the combine this year than in most years, because we're really trying to hold on to soybeans as tightly as we can, hoping that some sort of deal gets done with China and we get to sell our beans $1 higher. So I do think there's still going to be a little bit more pressure, harvest pressure on corn here until we get to about 65% done on harvest. I think we'll be about 50 to 53% done when we see crop progress on Monday afternoon. Yeah, so maybe a little bit more pressure in corn, but ultimately I still think corn goes higher. I think we'll get back above the 370 mark. I think we'll get back above that 100-day moving average again. And I still see corn prices potentially moving higher through now and the end of the year.
Ted, I'm going to push you a little bit harder here. 370, 376. When can we expect to see those prices again?
Well, when we find a bottom and we get some sort of bounce. Really, I think we'll see it in the next couple of weeks,
okay,
likely. Like I was just saying in the previous question, we need to get through some of the harvest pressure first, and we're not that far from being 60, 65%. So maybe a week to 10 days. Once we get past that, I think we have more upside potential.
Okay. Ted, final question here from social media. It's a great question, I think, to wrap up this corn segment. We've got Paul in Iowa, Neola Farmer on Twitter. If we need to sell corn off the combine, what's the best way to re-own it on the board?
Yeah, hi, Paul. There's a number of ways to do it. I'm not terribly afraid of corn futures like I am in soybeans. I really don't like the idea of being long soybean futures just because of what we've got going on. But for corn, I don't think that is quite as risky. So if guys want to be 1-for-1, then corn futures are a good way to do that. We also have options. Call spreads are a great way to do that. And that's sort of the marketing plan here this year, is to use cash market, use cash sales to manage your downside risk, and then use either options or futures or use the board to manage your potential. And again, Paul, I think that's a great strategy. Using calls to replace those bushels, I think, is a very good thing to do, because again, the corn story is really, I think, fairly friendly going into next year. I think re-ownership is a very good idea right now.
Okay. The soybean story, not so friendly, Ted. Let's talk about soybean exports to China. We got news this week that soybean imports have seen their biggest drop in 12 years. Obviously, tariffs, African swine fever, we're seeing a lot of things right now. Is that what pulled the markets back here at the end of this week?
You had a number of things pulling the soybean market back. For one, on Monday we were sharply higher based on weather concerns. We kind of hit the pinnacle of our weather concern really over the weekend, and that was expressed on Monday. But then beyond that, the weather forecast looks pretty good to get back in and get back out and get something done. So you had that weather premium kind of coming out of the market. Throughout the week, there was more talk about how we're so far, very far away from getting any sort of deal done with China. So the hope that something might get done before midterm elections, you really saw the ending or the dying of that hope here this week. And then on top of that, throw in some cancellations on the export sales report on Thursday, and then some blatant China cancellations happening there Friday morning, really compounds the idea that, hey, this is not getting better. The situation with China is not getting better. So I think the soybean market is kind of resigning itself to that notion. Now, for next week, we might kind of change that a little bit. I think we will at some point start to put some hope back into the market on the idea that President Trump and President Xi plan to sit down at the G20 meeting in Buenos Aires on November 20th. President Trump has had a very good track record of sitting down with world leaders and getting things done, making friends, really. He's much better at making friends in person than he is on Twitter, apparently. So at some point, I think that the market will start to rekindle that hope. Not necessarily that we're going to get something done before the midterm elections, but that we might get something done, or at least move in the right direction. So, yeah, I think there was a number of things that were pushing soybeans down this week. Weather, export sales, cancellations in particular, poor sales on top of that. But, you know, I think we'll get over it. Seasonally, we still have sort of that tendency to go higher this time of year. We still have very expensive beans down in South America. I think there's still upside potential for soybeans.
I want to turn our attention here to South America and what's going on here between the U.S. and China. Let's look at 2019 in particular, out in the future.
Okay.
If we don't see a trade deal get put into place and we see South America harvesting and planting a big crop again next year, what's happening to U.S. soybean prices?
Yeah, okay, so after we get past the first of the year, when we look into January and February timeframe, as we're getting ready to plant, this could be the next big time frame where soybeans can run into some major problems. Because like you said, if we don't have a deal in place by the time we flip the calendar to 2019, we're running out of our export season and getting closer to South America's export season. So we're sort of losing our opportunity for this year and putting a dent in that 885 million bushel carryover that could actually get bigger. And if South America's crop looks good, and especially if it looks really very good, wow, things could get really nasty as soybeans really try to ditch as many acres as they possibly can. So before we get into planting, if we don't have a better situation than what we're looking at right now, soybean prices could get really ugly. So keep an eye out for that. You know, a lot of times during the year, we'll have our second or third best marketing opportunity happens between October and the end of the calendar year, right during that holiday season. Basis has a tendency to get better as guys really get away from making cash sales and kind of lock the bins for the year. And the board kind of has a tendency to drift higher. So this is a good year to pay attention. You know, don't just finish up harvest, lock the bins, go spend time with the family for the holidays. Certainly do those things. I mean, have great time with your family, but keep an eye on the markets and keep an eye out for making some sales and taking some opportunities.
Ted, I hate to cut you off. I know you love talking about soybeans, but I want to make sure we squeeze in some time for meats here. Beef export sales have been dropping off for the past month and a half. Will we continue to see that? And if so, what's that going to do for our beef demand moving forward here into the end of the year?
Well, the stronger dollar isn't helping anything there, Delaney. Fortunately, domestic demand has been really, really strong. Just in the last week or so, we've started to call that into question a little bit because of the turmoil that we're seeing in the stock market. And when you have funds, your main demand buyers, starting to get nervous, that's a good reason why we've seen a pullback off the highs in the cattle market. Not only that, I mean, we've got a lot of supply. We've been talking about that for a while. Cattle on feed here on Friday, it was a bearish report. It was expected to be a bearish report. It was about as bearish as we were expecting. But I mean, look at the numbers. I mean, on feed, we're what, 105%?
Yeah, I think inventory was up 5% in feedlots.
Yeah, it's the largest number we've seen since we started reporting in 1996. Largest October number we've seen since we started reporting. And then you've got marketings below where we were this time last year. So you've got that supply building. You've got weights 3 pounds over week, and 3 pounds over where we were this time last year. So we know that supply's there. Fortunately, we have good domestic demand, and export demand, while it has tailed off a little bit, is still solid. Ultimately, I am a demand bull for livestock as a whole, but we really came to a point where the building supply was weighing heavily on the market. We needed to see a pullback. We have the December contract trading at a pretty large premium to cash. So this was sort of expected. We needed to see it. I don't think we need to flush out to new lows or anything like that. I think we will find a bit of a basing formation here sometime soon. In longer term, I can still see higher prices down the road. Okay, Ted, your 10-second thoughts. African swine fever, is it going to cause the hog markets to continue in this downward trend or up? African swine flu, that by itself is not going to cause markets to turn around and go higher. I think December hogs are going to go down and fill that gap between 49 and 50. But like I said, domestic demand, I'm bullish. I think that hogs will find some footing and start to bounce back again. All right, Ted, we're going to save the rest of the hog discussion for Market Plus. Thanks so much. Sounds good.
That wraps up the broadcast portion of Market to Market, but we will keep this conversation going on Market Plus, where we'll answer more of your questions. You can find it on our website at iptv.org/MTOM. It's harvest season. Does weather have you stuck in the house, or are you making another round? Either way, send your photos to post on our Facebook page. You can check out the entire collection by searching IPTV Market. Join us again next week when we'll explore how pumpkins are more than just for pie. So until then, thanks for watching. I'm Delaney Howell. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company. Offering a full line of grain drying and storage equipment and steel buildings, Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.